Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Worries over Warsh. 30-year US yields jump to a 19-year high and the dollar slides as investors question the Fed chairman's commitment to tackling inflation. We'll also preview today's decision from the Bank of England. Big tech divergence. Investors reward surging cloud revenues at Microsoft but sound the alarm over Meta's AI spending. And in Korea, bumper chip profits aren't enough to boost Samsung. Apple and Amazon are up next. And the US launches a new wave of strikes against Iran in a return to Middle East escalation. Brent holding just below $90 a barrel. Well, a very good morning. It is a busy Thursday for earnings. We've had the Fed decision. Now we look ahead to the BOE. This is the picture in markets this morning. Asian stocks whipsawing between gains and losses. You can see right now the MSCI Asia Pacific Index is down 0.5%. European futures pretty flat. Nasdaq futures pointing to gains, but of course we closed in correction territory on the Nasdaq yesterday. Futures helped by Microsoft, though Meta falling post-market after a disappointing revenue forecast. Now let's turn to the cross-asset picture. Oil is down 0.6% on Brent at $90 a barrel. The US military has wrapped up that fresh wave of strikes on Iran. It stopped short of hitting bridges and power plants. We've had long-end treasury yields, as I say, at their highest since 2007 after the Fed stood pat last night. We're up again this morning at 5.23 on the 30-year, up 3 basis points. And the dollar had sunk the most in 2 weeks after that Fed hold. The Bloomberg Dollar Spot Index is pretty steady at the moment, holding at that level. We've got plenty of earnings to bring you this morning, so let's get started. We begin with earnings out of Spain, kicking off with BBVA, one of Europe's biggest banks. Of course, investors poised for another strong quarter. And indeed, we have second quarter net income coming in at €3.06 billion, a beat on the estimate of €2.95 billion, and BBVA announcing that it's going to start a buyback of as much as €2 billion. So that is BBVA. Next up, we turn to AB InBev, of course, the maker of Budweiser and Stella Artois. We're looking for benefits from the World Cup. Can it grow volumes across markets to offset China weakness? What you are seeing is that second quarter organic volume growth is up 0.9%. So just ever so slightly shy of the estimate of 0.96% growth. Missing on that. That is the redhead for that company. Now, let's turn to broader markets because, as I say, we've had shares whipsawing in Asia. We can get straight to an update from Avril Hong in Singapore. Avril, it feels like traders just don't know what to focus on in Asia this morning.
I mean, I think you used the right word there. Whipsawing is right. You look at the region's benchmark, it's now in negative territory after earlier quite sharp gains. And I think it's just a sign of the times, this volatility that we're seeing, of course, being triggered by the South Korean markets as well. Of course, on the earnings scorecard front, at least, there seems to be a bit of easing of investor concerns that these massive capital expenditures might not necessarily translate into huge enough profits as far as Microsoft is concerned. That seemed to, earlier in the session, boost some of the investor sentiment, but flip the board. We also had earnings in Asia from Samsung Electronics, and for its chip sector, the 250-fold profit surge was handily beating expectations. You also have them seeing memory demand remaining robust in this half of the year. You had Advantas as well, another AI-related name that in this part of the outlook looking quite upbeat, but it's pairing some of the double-digit gains from earlier, and you're even seeing Samsung, which surged 8+% earlier, now slipping. I think it just speaks to the volatility and the continued concerns of these wild swings in the market, forced deleveraging as well, something that's also been catching concern and attention from authorities after they let the leverage ETF genie out of the bottle. They're now under pressure to help stabilize markets given the rout, and they're pledging more curbs for leverage ETFs. Now, flip the board. It's also, of course, about the reaction function to the Federal Reserve's signals, particularly from the words of Kevin Warsh or the lack thereof. We've been seeing in the region tracking treasury declines, the steep declines in long end bonds. In Japan, of course, that's in focus because of BOJ tomorrow. Most of the repricing today happening on the 10-year, but we also had a 2-year auction that drew weak demand despite higher yields. This is against the backdrop of expectations of the BOJ tightening. That being said, consensus is for the BOJ to remain on hold tomorrow. Lizzie?
Avril, appreciate the overview. That's Bloomberg's Avril Hong. Well, let's zoom in on the macro side of things, shall we? The US 30-year yield holding around its highest level since 2007 this morning. This after the Fed kept rates on hold for a 7th straight month last night. Now, 3 officials back to hike, but shorter-dated bond yields fell as expectations for a move higher in September ease. So investors questioning whether Chairman Kevin Warsh is really going to deliver on his promises to tackle price pressures.
Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. I asked for a good family fight and I got one. I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. In the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic.
So a little nod ahead to Jackson Hole, of which we'll have full coverage, of course. But for now, let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive. And Ven, I've got to hand it to you. You told us all week that Warsh was needing a hike for credibility. Now, when we look at the markets, it feels like investors are showing that they doubt his verbal commitments to curb inflation. Could that become a longer-term issue for the new Fed chairman?
Morning, Lizzie. I think that it is definitely becoming a problem already, if not later down the road, because he says that he wanted a family fight and he got one. But what the markets really want to know is, will the real Warsh stand up here? Is he the one who talks very hawkish, as we saw just now, or the one who goes into the FOMC voting committee and then votes to hold rates? That is not what that kind of dissonance is not what the markets want. The markets want clear-cut direction as to where the Fed is headed. Are they going to be able to raise rates as they talk? And is the rates going to be restrictive enough to curb inflation? Warsh is the first one to point out that the Fed has been missing the inflation target for 5 years now. But for 2 meetings now, the Fed hasn't taken any action under the new chairman. So this reminds me of what is happening with the Bank of Japan, which meets tomorrow, as you know, Lizzie, and they have been dragging their feet in raising rates, and the markets have been voting with their feet and sending JGB yields higher, much higher than in most other markets, and they are the worst performing markets. The US is not the worst performing bond market this year, because that title goes to probably Japan and the UK in equal amounts. But I think that the way it's all setting up, I think that the US treasuries are going to be punished, and it's going to become one of the worst performing markets.
OK, Ven, thank you very much. That's Bloomberg MLive strategist Ven Ram. Well, let's also just feed in the tech story here. We'll go back to Asia for this. Samsung's semiconductor arm reporting a more than 250-fold jump in profit, reflecting the headway that it's making against rival SK Hynix in that AI memory boom. The shares, as Avril mentioned, are down now after initially gaining. And we can get analysis now with Bloomberg's Asia tech reporter, Newly Purnell. So, Newly, the market reaction has been volatile. How do these numbers sit alongside investors', let's be honest, sky-high expectations for the chip-making industry?
That's right, Lizzie, and that 250-fold increase in profit for Samsung semiconductor arm will be a number that people are going to pay attention to, because there is so much scrutiny and concern, speculation about the demand for these kind of memory gear. There have been concerns over potential overcapacity. Are companies like Samsung and others making too much of this stuff? And then there's also been suggestion that there could be competition on the horizon from China, with a report about companies there perhaps getting closer to making some of this some of the sophisticated tech. So that number will jump out because it would suggest that companies are still demanding some of the stuff that Samsung is making.
Well, let's also turn to the US, because we've had earnings from Meta and Microsoft. Concern around Meta, really, after it raised the low end of its full-year forecast for both capital expenditures and total expenses. Let's take a listen to the Meta CEO, Mark Zuckerberg, defending his firm's AI capex plans.
Our investments in AI are accelerating every major part of our core business. They're improving the experience for people using our apps, driving better performance for advertisers, and helping our teams build new experiences and ship faster. Second, we are developing new personal agents that will be the foundation for our next wave of products and revenue lines in the months and years ahead.
Newly, the market reaction was positive for Microsoft, but not for Meta, but both pumping huge amounts into capex. Why has Zuckerberg not been as able to convince investors that his bet's going to pay off quickly?
Right. To understand that, you just have to think about the nature of Meta as a company. Of course, they make the vast majority of their revenue from their billions of users around the world serving ads to them. They had costly venture into AR and VR and the metaverse, remember that? And now leadership of the company is saying, we're spending these billions and billions of dollars to build out AI capex, and essentially trust us that his stuff is going to pay off. In some other comments later, Mr. Zuckerberg said, we know this is a big bet and we believe it's going to pay off. Microsoft is already making huge amounts of revenue on its cloud business. It said its Azure cloud revenue was up at the highest rate in 4 years. So they have actual services they can sell to companies to take advantage of this boom in AI. Meta, on the other hand, is talking about ways they can incorporate this into tools that users can use. Their AI services, I know they say they've made some advances in some of this tech for helping advertisers on the back end, but users of their front-end AI services, you don't hear them talk about them as much as, say, ChatGPT or Claude or some of these others rivals. So it essentially comes down to Microsoft being able to actually operationalize and make money off of some of this stuff, and Meta saying, we're pivoting, we're spending a ton, it's going to pay off.
Okay, a really useful distinction there. Bloomberg's Newly. Pernell, thank you very much for the analysis. Now, let's turn to the geopolitical element in the markets this morning. Brent crude trading near $90 a barrel after the US carried out a fresh wave of strikes against Iran that focused on military targets. It did, though, stop short of hitting bridges and power plants. Also, in the last half hour, the Jordanian military says that it intercepted 5 missiles from Iran. So let's put it all together. We can speak to Bloomberg's Abir Abu Omar, our Horizons Middle East and Africa anchor, of course. Abir, good morning. Just talk us through what's been going on in the last few hours. It's been busy where you are.
Yeah, good morning, Lizzie. I mean, you just alluded to it, right? Tit-for-tat strikes happening yet again in the region. In the past hour or so, Jordan's media put out a report saying that it intercepted, the military, as you have said, intercepted 5 missiles coming from Iran. Now, this follows what was called by U.S. Central Command a heavy night of striking targets in Iran that started 8 p.m. ET. Now, again, you've mentioned that those included military targets. The U.S. this time around did not strike any civilian infrastructure for the time being, right? But it looks like this escalation in the region is returning one more time. This follows a lull over the past few days, Lizzie. We've spoken throughout the course of this week about how the United States stopped attacking Iran late on last Friday, without giving any explanation. The report reports that did come about suggested that the United States was running out of ammunition. But nonetheless, we saw that period of quietness restarted by Iran hitting targets in the region. But Lizzie, what's important here is that not only is an escalation returning to the Middle East, but we're also seeing new fronts getting open. Essentially, we're seeing Saudi Arabia and the United States hitting targets in Iraq. Saudi Arabia saying that was an act of self-defense because Iraq militia backed by Iran had targeted energy infrastructure in Saudi Arabia. And so you're seeing new fronts opening up. The Houthis in Yemen also threatening movement in the Red Sea. And so we're seeing these new sort of facets emerging. All the meanwhile, the Strait of Hormuz, the movement there still pretty much paralyzed. We saw, though, an LNG tanker that is flagged to Qatar making its way through the Strait of Hormuz with its lights switched on. It's been idling around the waterway for about 3 weeks or so. And so positive signs, but it's riddled in all this negativity that is returning to the Middle East with, as you've mentioned, Brent crude prices now edging very, very close to $90 on the barrel. So it looks like the energy markets are really moving one more time with those headlines that we're seeing coming out of the Middle East.
And indeed, just as you've been speaking, we have tipped past $90 a barrel. 90.75 is where we trade. Brent actually gaining now. Abir, thank you so much. That's our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. Well, turning to the risk events on the docket for today, we have a raft of GDP numbers for the second quarter coming out across the euro area. The euro area number itself at 10 a.m. London time, national numbers in the run-up to that. Then at midday, it's the Bank of England decision, a hold expected, but how much dissent will there be following those hawkish votes at the Federal Reserve? And then at 1:30 p.m. London time, we'll turn our attention stateside for the US PCE and GDP numbers building on that economic picture for the Fed after last night's hold. But still ahead, how is the lipstick effect boosting L'Oreal in times of trouble? Catch our exclusive conversation with the CEO later. But first, French advertising giant JCDecaux reports better than expected first half revenue, and the co-CEO will join us next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:19 a.m. here in London. Well, it is a busy day of earnings. We'll turn to more now. The French advertising company JCDecaux reporting better than expected growth driven by digital. And I'm pleased to welcome the co-CEO Jean-François Decaux to the programme now. Great to have you with us, Jean-François. Thank you for making time. Just running through these numbers, you're projecting organic adjusted revenue for Q3 that's just shy of estimates, but there's a beat when it comes to second quarter adjusted revenue growth. What's your message to shareholders this quarter?
Now, we had a very good first half with a very strong financial performance. Revenue was up 5.7%, driven by digital, which grew nearly at 15%, boosted by our programmatic revenues, which grew about 30%. So very good first half. Geographically speaking, as you know, we are very well diversified, which is a plus for the company. US grew at about 20%. UK 12%. We had a very good first half as well in Latin America and in the southern part of Europe, driven by Spain and Italy and Portugal. So very good first half. AI is also helping us in terms of revenues because the tech sector was up 19%. And a lot of campaigns from AI brands. I mean, San Francisco, for instance, but also Shenzhen. About 1/3 of our revenues came from generative AI campaigns.
OK, well, I'll come back to AI, but just in terms of that regional breakdown, you have got a strong presence in the Middle East. I know you have a presence in Saudi Arabia and the UAE. What impact is the Iran war having on business in the region?
Less than expected. This region is about a bit less than 5% of our revenue. and we were down roughly about 35% in the second quarter. And in the third quarter, it's too early to tell. But a lot of companies are basically taking the view that it's business as usual. So they are not stopping advertising as much as one could have expected. So therefore, the impact was not as great as we were thinking when we guided our Q2 numbers.
Yeah, so business as usual in the Middle East, but is there a broader, more global impact of the geopolitical tensions? Are you seeing clients delaying their advertising campaigns? Do you expect a slowdown in activity for the rest of the year?
No, we don't see that. That was the fear in the second quarter, but we grew 5.7% in Q2, well ahead of guidance. And we don't see any slowdown in Q3 across the world. It's a bit too early to tell. Obviously, we said that we think we are going to be up 5% in Q3. But we get a lot of late bookings. Programmatic is now around 12% of our digital revenue. We are well ahead of the sector as a whole, because for out-of-home media, programmatic is about 7% of digital revenue. We're the first company to launch an SSP platform. We also have a DSP and a DMP, which is very unique in the sector. And we are doing extremely well, and the programmatic revenues is almost on a real-time basis. So that's why it's a bit harder than in the past to predict the landing for Q3. Also, we have a lot of late money, but programmatic is helping us to grow the digital revenue, which in the Q2 of this year was about 44% of sales. So very strong digital growth in Q2 and in Q1 as well.
But of course, analysts have pointed out that because you've got such a strong outdoor business, it somewhat shields you from how much AI is changing the media landscape. I just also want to come back to France, a key region, your home, of course. It's less than a year to the presidential elections. Are advertisers concerned about the potential impact of that? Is the politics having an impact on volatility and business decisions for JCDecaux?
Advertising is mainly driven by consumption and by the economy. The economy in France is not doing as well. Having said that, out-of-home in France has a very strong share of ad spend. It's about 9%, so it's well above the worldwide average, which is about 7% of ad spend. By the way, we are getting market share in a lot of markets, especially in markets where there has been some sort of consolidation and where digital is more than 50 or 60% of sales, like Australia, Brazil, and to a lesser degree, Germany. So France grew at about 1% in terms of advertising revenue in the first half. Our business continues to be very strong. We have a unique network covering more than 600 cities in France. And outdoor is part of most advertising campaigns, whether they include online or television. So the outcome of the next presidential election for the time being is very uncertain, as you know, and we don't see any negative impact on the advertising market as such as of today. Our Q3 is well advanced, and we are quite optimistic about the French business, given our very strong presence in this country.
Okay, Jean-François, thank you so much for making time for us this morning. An optimistic outlook. That's all we've got time for, unfortunately. Really appreciate it. Thank you so much. That's the co-CEO of JCDecaux. Well, coming up on the programme, Airbus earnings jump as it ramped up aircraft production. We'll get you the details next. This is Bloomberg.
And we're now, for the most part, in an environment that does not impose any tariffs on the products and chipsets that we're shipping around the world. So that is good news, and I think it's also in the mutual interest of all the manufacturers in the world. And so therefore, tariffs is not a headwind for us anymore.
The Airbus CFO, Thomas Toepfer. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burton with your top stories. Worries over Warsh. 30-year US yields jump to a 19-year high and the dollar slides as investors question the Fed chairman's commitment to tackling inflation. We'll preview today's decision from the Bank of England as well. Big tech divergence. Investors reward surging cloud revenues at Microsoft, but sound the alarm over Meta's AI spending. And in Korea, bumper chip profits are not enough to boost Samsung. Apple and Amazon are up next. And the US launches a new wave of strikes against Iran in a return to Middle East escalation. Brent edging above $90 a barrel. Well, a very good morning. Checking in on these markets, 6:30 a.m. here in London. And we have Nasdaq futures pointing higher 0.5%. Of course, the Nasdaq closed in correction territory off the back of earnings yesterday. Futures, though, helped by Microsoft reporting its fastest cloud computing growth in 4 years. Meta, though, falling post-market after a disappointing revenue forecast. Now we have oil at $91 a barrel on Brent now. After the US military wrapped up that fresh round of strikes, it did, though, stop short of hitting bridges and power plants. But if we look at the 30-year yield, we are now at 5.22 on the 10-year. Of course, we had the Fed standing pat last night, hawkish messaging. Are we going to see hawkish action down the track? We are currently up 3 basis points on the 30-year as things stand. Now, turning back to the earnings story, we've got so many earnings breaking this morning, but a redhead dropping from Sanofi, raising its 2026 forecast for sales growth ex-FX to about 10%. That is the redhead from them. We're also looking over to Adidas, and we have second quarter earnings from them. Surely a Jude Bellingham World Cup boost we are going to see in these numbers. The redhead is that second quarter operating profit comes in at 574 million euros, so very much shy of estimates of 615.6 million euros. If we dive into this, traders really wanting to see that momentum was going to be there for years and months ahead, so it could take on Nike in the United States, but gross margin at 52.5%. That's a beat on the estimate. We shall have to dive into these numbers more deeply, but they've named Birgit Kretschmer as their CFO. So can she turn these fortunes around? I do wonder. The share's down nearly 9% in the past year, and that compares to the broader German DAX index up nearly 5%. Now, let's also turn to the latest economic data out of France. Second quarter GDP numbers breaking. Economists had expected a move from expansion to growth, but so much uncertainty around this print given the geopolitical developments, the recent heat waves as well. What you're seeing is a rise of 0.2% quarter on quarter, bang in line with estimates of 0.2%. And just in terms of euro dollar, as you can see there, we are weaker 0.1% at a 114 handle. Of course, we'll also get Spanish, German, Italian and euro area numbers throughout the course of the day. Well, staying with economics, Fed Chairman Kevin Warsh has insisted that policymakers' decision to leave rates unchanged was not a sign of inertia at the central bank. Next up is the Bank of England. It's expected to hold later as well, as it sticks to a wait-and-see approach to navigate the wild swings we've seen in oil and gas markets. With me now for analysis is Ellie Henderson, economist over at Investec. Really good to have you around the desk, Ellie. So if we look at the latest economic data out of the UK, it's kind of given cover, hasn't it, for the BOE to sit on its hands today. Is there a risk, though, that by holding rates steady, it's too complacent about the risks ahead?
So our view is that the Bank of England will vote today to keep rates steady, bank rate at 3.75%. But we think there'll be a lively discussion around the table. We think there'll probably be a couple of dissenters.
Just a couple?
Just a couple of dissenters voting instead to raise rates at this juncture. Yep. We understand the arguments. Oil prices are sharply higher. But we point out 3 key reasons why we think the MPC collectively will vote to hold. Firstly, policy is already restrictive. So what that means, it's already doing some of the work weighing on inflation. Secondly, the labour market is relatively loose in the UK, so the risks of second-round effects from this oil shock stemming from higher wages is arguably reduced. And thirdly, the MPC would likely be cautious about overreacting to recent developments because the situation in the Middle East is so fluid. We've seen oil prices tip up above $90 per barrel this morning, but last week they were over $100 per barrel. So unless the MPC judge that energy prices will be elevated over a longer period, we think for now they will hold off and wait and see.
We talk about a lot about the international factors. What about the fiscal domestic factors? Of course, we've got a new government in, a new Chancellor in, John Healey, big promises on defence and the cost of living. Do you expect to see borrowing after the autumn budget and that precipitating rate hikes from the Bank of England down the track?
So I think it's going to be a long wait until the budget. The government have to give the OBR 10 weeks warning, so we know it's going to be at least in 10 weeks' time. Of course, a lot of pledges have been made by the government, a lot of promises. At the moment, they're going to be fully funded, and we expect them to be fully funded in the budget. It seems like financial markets do believe that pledge. You know, we look at the spread between gilts and treasuries and bonds, and it's not widened dramatically. But as always, the devil is in the detail, and we do wait till the budget for that.
I mean, just on that, do you think that the margin against the fiscal rules will go back to being razor thin?
So there's been estimates out over the week as to what the headroom will be. Of course, the rise in inflation that we've seen doesn't help, but we have to wait until the budget, see what the OBR comes out with, and also see what cost-saving measures that the Chancellor, John Healey, comes up with. But there's a growing list of wants and needs, and the public finances are tight, but the government does seem committed to sticking to those fiscal rules.
Were you, let's return to the Fed, in the camp expecting a surprise hike from Kevin Warsh at his second meeting? Should he have gone for a hike, even if that's a different question to, whether you thought it was likely?
So we were in the on-hold camp. We thought that the FOMC would collectively opt to hold the federal funds target range at 3.5 to 3.75%, which is what they did. I watched it last night. It certainly was an interesting meeting. We did have 3 dissents. We're not quite sure at this stage why those 3 dissenters voted for higher rates.
Yeah.
Warsh did say that in time, the individual people that voted for a hike will explain their actions. So we wait for those comments. But I think the financial market reaction was very, very interesting.
Well, yeah, does the fact that you had 3 dissenters for a hike make September more likely?
It's hard to tell because we've got very little explanation as to why those dissenters wanted a hike. It's easy to understand. We don't know their views, but, oil prices are higher. Inflation has been above target now for over 5 years. There's got to be a pain threshold at some point where the Fed would want to act, but we don't actually think we're there yet. We had a soft CPI print. We've got obviously PCE later today. There's obviously disinflation in other areas outside of energy, and we think that will be enough for now to satisfy the majority on the committee to hold steady, given that rates are restrictive.
But as you suggest, the comms are in a very different place right now. That statement notably short. Warsh, of course, has cut forward guidance. Does it suggest to you that the Fed's deliberately trying to look through the geopolitical noise? And really, when we see this kind of from the Fed as well as the BOE and the ECB, how much harder does it make your job right now?
So a Warsh Fed is very different from a Powell Fed, and change is always hard, but I'm sure in time we'll get used to the new communication strategy, as do I. But yeah, I think what Warsh will be looking at will be the financial market reaction, and that actually, if you saw the moves in the policy-sensitive 2-year yield and the longer-term 10-year, 30-year, that our market's starting to question whether actually the Fed will deliver on its longer-term price stability. I think we've had 2 meetings. It's too early to tell, but that's something definitely I'm sure his communications task force will be looking at.
OK, so big questions on credibility. Thanks for underscoring them. Ellie Henderson there, economist at Investec. And we will be coming back to the Fed story later on in the programme with some charts on this. Meanwhile, viewers in the UK and Europe can watch our special coverage of the Bank of England decision and press conference from 12:30 p.m. London time. You can also see it on the terminal, Bloomberg.com and YouTube. Later on as well, Francine Lacroix will be speaking to the Governor, Andrew Bailey himself. That conversation at 4:30 p.m. London time. But coming up, we shall turn our attention back to earnings. Schneider Electric raising its forecast as second quarter earnings beat. The CEO joins us for an exclusive conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to earnings. Schneider Electric has raised its sales and profit guidance for the year. This after the AI spending boom drove unprecedented demand for its data center equipment. I'm pleased to say the CEO, Olivier Blum, joins us now for an exclusive conversation. Olivier, really great to have you with us on Daybreak Europe. This is a strong set of results. I'm sure you're happy. I can see it on your face this morning. It doesn't seem like you're expecting any sign of the hyperscalers moderating their investments in data centers. Just give us your outlook for the months ahead, please.
Sure. So good morning. Thanks for having me. Look, it's a solid H1, but I like always to compare in sport. We are at the halftime of the game for 26, so let's make sure we continue to deliver very well for the second part of the year. To answer your question, I'd like to remind you that data center, indeed, at the end of last year was 25% of our revenue. But when you see the performance of Schneider Electric at the end of the first semester and the revised guidance, it is indeed thanks to data center, but it's also confirmed the increase of the electrification, because the fundamental driver of growth for Schneider is everything which happened in electrification and in the digital world, therefore AI. And of course, that combination helps Schneider Electric to deliver a pretty strong growth in H1. So data center, is on the rise. We all consume AI. Schneider Electric bring AI in every kind of solution to make energy more efficient for our customer. So definitely we see a solid demand. It's confirmed. We see it for the next 2 coming years, and we are well positioned to capture a large part of the growth.
Well, you've got a really interesting tie-up with AMD, a blueprint for building AI data centers, as well as a separate collaboration with Foxconn out of Taiwan. What's next in that space?
Look, Schneider Electric has been for 190 years an industrial company. I like to say we advance energy tech to the next level. And moving from an industrial profile to a more tech profile, you need to work more with partners, with technology partners, with suppliers, because we need to bring all our capability to deliver more and faster to our customer. So indeed, when you work across the life cycle in the data center, you need to anticipate what are the next generation of GPU with AMD, with NVIDIA, with the hyperscaler. And we are using all our software to make sure we optimize the design. Then we make it easy for our customer to execute and again to deliver efficiency in the field of power and cooling. Foxconn is a partnership, of course, to support the growth of what we have in data center. We like to build our own factory, but we like also to use partners to deliver even more, even faster everywhere. And we started with Foxconn in North America.
But just as another example of how you're partnering with others along the supply chain, you've also announced a deal to buy Cognite for $3.1 billion. That's to expand your industrial data and AI software operations. What's the integration timeline there?
Well, look, in that case, it's a little bit more than a partnership because, as you know, it's an acquisition. It will take a couple of months between signing and closing. But it's a very fundamental acquisition for Schneider. We like to say that our ambition, our strategy is to connect the physical and the digital world. We are everywhere in home, building infra, data center, and industry. We have been providing all those equipment. And our vision is that if we are able to bring the layer of intelligence, we go to the next level of efficiency and sustainability. What Cognite helps us to do is to create a very, very strong data layer, a foundation for data, which is AI native, where we can capture data from the physical world and amplifying with agentic layer and workflow, we deliver eventually more value for our customers. So it's a very, very important acquisition. I've met the team. They have great engineers here in Europe, in Oslo, and we are very, very excited to work with them in the future.
You're also in talks to acquire Shelley Group. What other types of deals are you exploring? Just so much going on. Could we see more in the Internet of Things market?
We are at a very exciting time. For more than 10 years at Schneider, we say we believe in electrification and digitalization. That's what delivers the next level of efficiency and sustainability. And I would say what we have been used to seeing in digitalization in the software world was good, but probably not good enough to deliver that full level of efficiency. Again, if I come back to what I said about Cognite, when you are able to capture data from the physical world and you bring a next level of intelligence for your customer, it's exciting. So to answer your question, our strategy is to grow Schneider Electric organically as much as possible. But every time we find great tech company that help us to accelerate that strategy, of course, we will look at it. And of course, always if we have the right price in front of us.
Okay, so some really interesting hints when it comes to future M&A. Just look, in terms of these results, what's been the impact of higher raw materials costs and tariffs as well on your margins, Olivier?
Well, look, since last year, it has started in 25, we have been impacted by tariff, even if we have a strategy to manufacture 90% of what we sell in every region. So that was the case in North America, but we are accelerating. We've been impacted big time on our product by the increase of raw materials, silver, copper, it continues. And of course, with the Middle East crisis, energy costs are rising, same on transport. So we try to be very responsible. On one side, we push our team to drive more productivity, more cost reduction. And we had also, in some cases, to price up to our customer to make sure we are able to continue to deliver great profit and great return for our investors.
Okay, and geographically, Barclays analysts have said that the market's missing your data center opportunities in China. Would you agree with that? What can you tell us about the Chinese market?
Well, the Chinese market for Schneider Electric has been a very exciting market. I had myself spent 6 years of my life in China. At Schneider Electric, we decided we need to have a China for China strategy. So even from a technology standpoint, there are stuff we do in China we don't do in the rest of the world. But I can confirm that as far as Schneider is concerned, number one, our H1 results are great in China. It's really boosted, one, by the external demand, the export, I would say, the industrial sector, but also data center in China. It's just that the Chinese market is structured differently. The stakeholders are different. The technology might be different, but we see definitely also a fast growth in data center in China.
Just finally, Olivier, I want to get your take on the fears that we've seen, especially this week, this quarter, when it comes to circular funding and AI capex. You've seen the likes of Alphabet and SK Hynix really seemingly punished for investing more. You're someone who's cashing in on the AI rush. What do you make of the market response to all of this?
I would tell you, of course, we've been benefit from AI because we deliver infrastructure, but we leverage AI in everything we do at Schneider Electric. When I talked to you since the beginning about energy intelligence, industrial intelligence, we are a big consumer of AI to amplify everything we do. And I do believe as a company, if you take the way we consume AI for our own technology, for our customer, but also to make Schneider Electric more efficient internally, I'm just at the beginning of the journey. So I cannot comment whether the level is correct or not correct, but I do believe we will consume more AI because it brings more efficiency to our customer and more efficiency to Schneider Electric. Now, we are a very reasonable company. We look at this forecast. We try to be very disciplined in capital allocation, in capacity, but I would say for the time being, we are very, very comfortable with the growth we see in front of us, and we believe it's a very solid one.
Olivier, thanks so much for coming on the show this morning. I'll let you go and enjoy those results. Olivier Blum, CEO of Schneider Electric. Great to see you. Well, we'll be watching L'Oreal as well as Schneider at the Open after it reported quarterly sales that beat expectations on the back of rising demand for haircare products. L'Oreal's ADRs rose as much as 4.7% following the results, and the CEO, Nicolas Hieronimus, spoke exclusively to Francine Lacroix about how the company has been so resilient.
Beauty is a very dynamic category, and it shows once again its resilience in times of trouble. We call it, whether you call it the lipstick effect or the dopamine effect of beauty. The market's growing. It has accelerated a bit in Q2, and people are going for innovation, for quality, and that's probably the reason behind our great first half at plus 6.5%, way above the market growth, is that we brought a lot of innovation and of superior quality into the market.
Do your customers spend differently in the US than they do in Europe than they do in Asia?
Well, the markets are different. Asia is a skincare market, and the good thing about Asia is that it confirms that China is back to positive territory and is driven by luxury. So there's, I would say, a stronger appetite right now for premium in China, and our L'Oréal Luxe division is at plus 10 after 6 months in China, which is very positive. So China is more about skincare. The US has always been a very strong makeup market and remains so, but it's true there's been really an acceleration of haircare a lot in the US. overall consumption is pretty good in the US. Consumers are pretty resilient.
So what's the hardest thing that you have to navigate, either in terms of tariffs, inflation, or trade in general?
Well, what's clear is that you have to be agile and you have to be able to adapt, whether it's on tariffs, whether it's the price of oil, which has an impact on the cost of transportation, whether indeed it's the impact of the crisis in the Middle East on consumer behaviors as it relates to travel retail, for example. So it's a lot about agility. Of course, currencies also have an impact, and we are happy for L'Oréal that the dollar is a bit better than it used to be. So in the end, it's about seizing the ascending trends and trying to leverage what I think is unique at L'Oréal is the fact that we are very, very spread. We call that a multipolar model. We are spread across regions and across price points and divisions. So whenever something is struggling a bit, we can bounce back in another area.
Nicolas Hieronymus there, the CEO of L'Oréal, speaking, of course, to Francine Lacroix. Plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:55 a.m. here in London. And just in these last few minutes, I want to bring you some terminal charts on last night's Fed decision. A 9-3 vote split really crystallising September as a live event, as you can see. Chairman Warsh saying explicitly that rates could be part of the solution if inflation stays elevated. But flip the board over, because the question is, does the market believe him? Credibility in question at this point. The 30-year yield at its highest since 2007. So in other words, the bond vigilantes doing the tightening the Fed hasn't so far. And flip the board one more time, because you can see how long bonds have broken with inflation. Arguably, this is where the capex plans of the hyperscalers and their potential inflationary impact is meeting the macro story. So the Fed holding, the bond market not. And the question for September is whether Kevin Warsh follows the market or lets the market do his job for him. Now let's take a look at the risk events on the docket for today, because that's not the last central bank decision of the week. We've still got the Bank of England decision to come later on today. We also, before that, have preliminary GDP data across the euro area. And at 1:30 p.m. London time, another read for the Fed on the US economic picture in the form of PCE and GDP. It's also a busy day of earnings. The opening trade's got interviews with 5 CEOs over the next 2 hours. Wish Anna and Guy luck. They'll take you all the way to the European Cash Open. Stay with us. This is Bloomberg.